talked a lot about having a team, and of course, you're a part of a lot of people's team, I imagine, when you start working with finances.
Absolutely. I like to think of us as a bit of a piece of the puzzle, if you will.
Yeah. Now, when you start looking at your role in the investment world, maybe give us a little background on, what CommonManInvestor is, because, you've worked with some pretty high-profile celebrity athletes, and so talk a little bit about maybe what is your business all about?
Yeah, no problem. Well, we are something different, is what I like to say. We're not financial advisors. We're not brokers. We're something other than that, something in addition to a supplement, if you will, because I've believed for a long time that you should have all those guys on your team. You should have a financial advisor. You should have all those guys sitting behind you, guiding your way into retirement, what you should do with those funds. But in addition, you should be a little more active. For example, my dad, I love my dad to death. He was sitting in the market when everything crashed, and he lost 40% of his net worth in a matter of months.
Right.
Like many people did, and I completely understand that. And there's nothing wrong with that. That's his
Well, there's something wrong if it's your money.
Right. It's a totally normal thing, but at the same time, in that market, you don't like to see your net worth go down, and there's nothing he could really do with it except for pull out of the market, and then he could never catch a part of that recovery. Now, what we do is we do something different, something more active, so that you can compound your gains by trading actively. And I teach my subscribers / members a way to be more active so they can protect themselves with stop losses, things of that nature, with like, say, 10% of your portfolio. Nothing more than that.
I've always said that there's a big difference between saving money and investing money.
Right.
And a lot of people, I think, consider their investments, or that they're investing, and really they're just saving. In the diversified portfolio, they call it investing, but really it's this passive savings account without any real understanding maybe of what it is I'm getting into and why. Would you agree with that?
Yeah, I would agree with that. And to a point, I can completely understand it too, because a lot of people don't like to be in charge of their exact portfolio. They like to be able to hand that money off to a financial advisor who says, all right, I'm going to try to go get you 10% over the next 10 years with the vast majority of their money. And they don't have to worry about it. They're not worried about, all right, should I be in this mutual fund? Should I be in an annuity? They talk through that with them, kind of let them guide their way. This is with something different. When you want to be more active, you want to say, hey, I got 10 grand in a rainy day fund. I'm not putting that in an annuity. It doesn't have to go somewhere secure. I'd like to be more active with that. And that's what we do. That's kind of what our niche is, if you will.
And so you call it hitting a lot of singles and then reinvesting the gains.
Right. Have you ever heard of that, give a penny right now or give me $1? When I was a kid, I had a babysitter named Tammy, and she said something to the effect of, hey, would you like a penny today, 2 pennies tomorrow, 3 pennies the next day, or would you like me to give you $1 right now? And so on and so forth. And I said, I'll take the $1, like every kid does.
Sure.
I'll take the $1 right now. And I didn't think about the compounded gains on that. That's kind of the theory that we run across, because when we're investing, we're going to lose on some of our trades. And we lose on about a quarter of our trades. But the thing is, as long as we are right more often than we're wrong, we're able to reinvest those gains and compound our gains on top. That's actually how we have such a large gain so far in 2013.
And you've been up 86% this year?
Actually, that's just Richard Sherman's account is up 86%.
Okay.
Yeah, I hate to...
Can you say that on the radio and tell everybody?
Because I'm just...
Cat's out of the bag.
Yeah, here's a funny thing is, I don't know for sure exactly what his percent is.
Sure.
The last I heard, because he advertises he has his own brokerage account, and he does his own...
Because you're not really controlling his money.
Right. I don't touch his money. I'm just giving him stock advice. He brags on his own gains, so,
He does. He'll brag. That's for sure.
Yeah, and I love that about him. But anyways, last time I heard, he was up 86%. I don't know exact total what it is
That's true.
right
I think
now.
on his Facebook page, he actually posts what he is up if anybody was interested.
Yeah,
and
Facebook, Twitter.
Yeah, you're not letting the cat out of the bag. So we have just about a minute left. Again, we're here with David Meyers, the owner of CommonManInvestor. And so what is kind of the strategy? Is it being active? And I mean, is there an all-encompassing strategy that you follow?
Yeah, absolutely. Well, without giving away every single thing that we do, we hit a ton of singles, and what that means is we scalp stocks basically. I'm not trying to double up on a single trade. I'm looking to ride that train. Like, let's say we're watching Apple's up. In the last few days, it's been up about 7%, I believe. And there were some catalysts in there. But bottom line is it was up 7%. It's in a nice little uptrend from the bottom. We would jump in there and we'd like to scalp, let's say 3, 5, 10%. And then we're out. We get out. We're not looking to ride it up to $700, $800 again. We just get our gains. We get out and we try to do it all over again. Mm-hmm. So, yeah, over and over and over.
It sounds so easy.
It kind of is. It sounds over easy, but it really is. As long as you're right more often than you're wrong, then you're doing good.
Yeah.